Well, thanks a lot, Congress. I'm the lucky person. I get to do this interview, and it's great to spend some time talking with you. I know you think about these issues a lot, and this is about regulating technology. And one of the things I think of as you on the Financial Services Committee, you've been very technology forward. You've been very pro-innovation, and technology seems to have really kind of changed how people invest. And the Federal Reserve has a report that says now 58%, a little more, of Americans are now in the stock market, and that's a huge jump from a decade ago. Talk to me a little bit about kind of how you see that trend and the importance of technology in investing these days.
Well, I think you think about technology and investing and getting a broader appeal to markets, and I think at companies like Robinhood, and some of my colleagues were like, "Oh, this is gamification of investing." You're like, "No, you made it like interesting, and so people engage in it." Now you have like high school kids and college kids getting small allotments, maybe from either money they made and saved or money their parents gave them, and they're experimenting, finding how it works. And so who knows? We might even have colleagues in Congress someday that have actually made a trade. And of course, on trading issues, we have other things going on in Congress that draw some attention too. But it's clear that young people really understand these things pretty well. And we had hearings about like the GameStop short squeeze, and this is a pretty sophisticated play, and it kind of rolls out on Reddit, and people were mad, and they're like, "Wow, how can they be doing that? I mean, you mean talking about the same thing you guys talk about on your Bloomberg terminals?" It's like all these tools are available, and everybody can actually participate in the market more. So, and as that's happened, well, you have a broader range of people that are doing it. And I think one of the big things too that's helped us is the idea of 401ks and responsibility for you to manage your own retirement funds versus a guaranteed benefit from pensions. That clearly proved hard to keep viable for a lot of companies, and they shifted to a defined contribution versus a defined benefit. And as that continues to, have its impact in the economy, more and more people are going to have to take note of, well, how is my 401k doing? And so they're getting involved.
So, and you kind of noted this, but a lot of these investors are younger. They're more diverse. They're people who start out with a small amount of money and kind of try to figure it out. The SEC has said, hey, these guys need more protection. They don't use an investment professional. They don't talk to a broker on the phone. Do you agree with that? Are these people that need extra help?
Well, I think, look, for the most part, there are some people that have really done some horrible things, and I feel bad. There was a kid who committed suicide that got a lot of attention because, he was essentially bankrupt, and he's like 20 or, something like that. So it's like kind of like a gambling problem for some people. It can be really bad. So I think, as people get involved in this, there should probably be tools that help, folks say, hey, this person might actually be getting a little backwards. And so I think that's a regulatory framework that can be dealt with. But, one of the things I'm most opposed to is this accredited investor rule, which is the idea that the only way we could trust you to invest your money is if you've already made a lot of money. And I remember we were doing a hearing, really pre-hearing. I was a new member. In 2017, you had this initial coin offering thing going on all over Wall Street. And I was, a new member of the Financial Services Committee, and I was like, can't we get a hearing on this? We couldn't, so 2018 is rolling around. We still can't get a hearing, so I scheduled a meeting at the Library of Congress. And we had people from all across the industry, from, big established firms like State Street to the New York Stock Exchange and NASDAQ to small startups coming in the crypto space talking. And one of the guys catches me afterwards, and he's like, hey, I write code for this, initial coin offering kind of early stage company, and I want to know why guys like you are blocking me from making investments into this company. I said, well, what are you talking about? And it became clear that it was the accredited investor rule, and he believed that Republicans were the ones that were pushing the accredited investor rule. And in a way, for young people who haven't really got acquainted with politics, that makes sense. You're like, oh, democratic access to capital, that would be like the AOC wing. And for a moment, it looked like AOC and Ted Cruz were going to agree on this. And then they kind of got re-instructed. And the Democrats went back to their default setting, which is, no, we protect deal flow for the donor base here. And we won't be letting everyone get access to these investments. And he was very frustrated. He's like, look, I don't have a lot of money, but I'm writing the code. I understand it, and I want to put my own money in. And I think this is going to do well. And he couldn't do it.
How about, like, kind of you mentioned the GameStop hearings, and this rule kind of started with GameStop. It started with kind of people in Congress saying, hey, there's a problem here, all these young investors are in the market. But then it's kind of morphed into, oh, what about predictive data analytics? What about AI? Do we know kind of what we're talking about here as we do this rule? And more importantly, does the SEC?
Well, I think the part that they thoroughly understand is they want to control it. And they might not understand exactly how the code works or how to write it or program it or even understand what the algorithm does, but they want to control it. And they're essentially going back to like the El Jefe business model. Come in and talk to the big boss, you get our blessing, cut us in on whatever, and then we'll let you go. And that's the kind of no action letter they've tried to do for crypto. And I've said it's kind of like Hotel California. You can check in, but you can never leave. And I know the lyrics go a little differently, but that's kind of the point is you start with the SEC and they never let you leave with the clarity that you come in seeking. It's an endless period of discovery. And I think that's essentially what, whether you're talking about the SEC or the FTC, what they're proposing on algorithms. And they're saying, well, it's just to keep us safe and make sure there's no discrimination. And they basically want to pre-clear the algorithms that companies are writing. And I think that's insane.
And I guess there's a question that's been raised, but is the SEC a technology regulator? Does it have the ability to do this? And then the other question, which is kind of dovetails with that, is like there's other rules on the books. There's regulation best interest, there's the fiduciary rule. So is this all necessary?
I think it's completely unnecessary. And I think, you judge something by the outcome. I mean, and the reality is companies do have strict liability for non-discrimination. And so you judge things, I know this is a novel idea, but you judge things not by their intent, but by their results. And if we did that, we could actually refine a lot of programs in the government. Some of them might actually go away eventually because the results haven't been what people claimed to be the intention. And I'm confident what they claim would be the intention here would be not the outcome. It would be a disaster for the market. And you just need to get, like fiduciary rule would cover a lot of it. If you look at, well, how do we recognize this on balance sheets? How do we tax it? How do we do whatever? Well, you look at the results of it and you treat it that way.
I've watched you on the Financial Services Committee. Republicans have a lot of issues with Gary Gensler's agenda, but this is one rule where it seems there's a lot of bipartisan opposition. I know you talked to your Democratic colleagues, but they've been writing letters about this. The Congressional Black Caucus members, a bunch of them have come out against this rule. So what does that tell you?
Look, it is interesting. This is, in a way, it kind of gels with privacy. And, I've talked, there's a different coalition in Congress than just Republican-Democrat. And in a way, it's to me, summed up by, like, the Patriot Act, right? If you really think that the government should really be the caretaker and overseer of everything, just to keep us safe and everything, you probably love the Patriot Act. There are Republicans and Democrats that love the Patriot Act. When it passed, George Bush was president, but there was only one person who voted against it in the Senate. That was a Democrat. There were 63 members in the House that voted against the Patriot Act. Since then, there's been a lot of buyer's remorse on it. And it's bipartisan, and it breaks on different lines. We just passed a bill yesterday on the Fourth Amendment's not for sale on privacy, where government agencies are buying up data in order to avoid getting a warrant or a subpoena, and things that they would normally have to go to the courts to get action on. And the data broker market really hasn't kept up with the Fair Credit Reporting Act, for example, which has limited uses. And the interest in that doesn't really break Republican versus Democrat. And I think on some of these kinds of issues, you have, the Congressional Black Caucus, the Congressional Hispanic Caucus, the Congressional Progressive Caucus, aligning with like the House Freedom Caucus and the House Liberty Caucus. And so the interests kind of go against kind of the center protectionist, statist kind of viewpoint and the idea that, no, that isn't really working for us. And I think the approval ratings for Congress will tell you the public doesn't think this is really working for us. And I think, the market doesn't trust that it will work for them either.
One of the things you've said isn't working for us is the SEC. I just want to ask you about this is your SEC Stabilization Act, which has gotten, some attention. Tell us about it, first of all, and then what's it trying to achieve?
Yeah, so, Gary Gensler's pointed out two things. We have a Gary Gensler problem. He's uniquely bad. But we also have a structural problem with the SEC. We have a super strong chairman at the SEC that's ripe for abuse by a bad person. Benevolent dictators, can be very effective and mask problems with the structure. Gary is, I think, universally viewed as not a benevolent dictator at the SEC. And so, I looked at it and said, well, let's go back to making it a commission. You look at the Federal Election Commission, and it's, parity. They have parity on the commission. And so they tend to solve the 80-20 issues, the 70-30 issues, and the things that are 50-50, they go to Congress. Like, you guys got to take action. And yes, sometimes Congress is not effective at taking action, but eventually it boils up to the point where Congress finally needs to do something. And that would provide more certainty for the market. I think as a former business owner, I would always be frustrated because, well, this administration is going to go this way, this administration. Just give us some certainty and stability. We don't want to watch, ping pong or tennis or now pickleball, I guess, right? We just want to say, look, we know the rules, and if they're common sense, we have the best capital markets in the world. We have a massive percentage of the world's invested capital in our markets. Why would we mess those up? And Gary seems committed to trying to mess them up in a lot of ways. So I think if we had parity, 3 Republicans, 3 Democrats on the commission, they would still make rules and they would still have enforcement actions, but I think it would depoliticize the SEC, which would be great for our markets.
Now, I think Gary Gensler might say, hey, this 3-2 commission has worked well for almost 100 years. My guy won. So why shouldn't I be able to go ahead and do this?
Well, unfortunately, a lot of Republicans agree with that sentiment. It's like, we need a super strong chairman to come back in and reverse everything that Gary Gensler is doing. And I'm like, just offer it as an amendment to my bill, and we can reverse all of the super polarizing things that any past chairman has done, and then we'll get it to parity, and we'll have, hopefully, functional capital markets. I think people have forgotten that the body that's supposed to make laws is Congress. Some of these things are political, like the climate change rule, like this, takeover of AI, and it gets very political. Well, there is a political body that's supposed to deal with that. It's Congress. We've got the unelected, unaccountable bureaucrats making far too many of these decisions, and I think that's part of why the American people are so frustrated. They feel like the government doesn't really work for them.
I want to talk about one of your favorite issues and talk about frustration, but that's crypto. This is an issue where you've been very, very involved, but what's your take on how the SEC is dealing with crypto right now?
That's a disaster. I mean, I already mentioned Hotel California regulation and El Jefe. Those are a couple of my stories. But, look, we've I think, felt like we were right on policy for 6 or 7 years. And I'm kind of leaning more towards what works in this town might just be political. And, the reality is market participants in crypto, I think overwhelmingly see themselves as left of center. Some of them way left of center, left of the Democratic Party. And they're looking up here like, what in the world's going on? Why are Democrats not good on this issue? And I point them to Elizabeth Warren and Sherrod Brown. Sherrod Brown, I don't know where he is for sure on the issue. He's good at having things surrounded, but he is the chairman of Senate Banking, and he basically does everything Elizabeth Warren tells him to. Elizabeth Warren runs the whole financial services lane for Democrats, and not all the Democrats actually agree with her, but they don't want to buck her. And she's boasted of having an anti-crypto army out there trying to kill this space, and Gensler checks in with her. We know they meet before every major crypto hearing, and he's taking his guidance from Elizabeth Warren. So it's been bad for our market. It's blocked a path to legislative clarity. But I think we have to get to the point where, what are the politics of this? This is an issue that now unites Republicans, and it divides Democrats. And look, it doesn't divide the public. The public knows they don't want a central bank digital currency. But unfortunately, a lot of them, that's all they go. They're like, central bank digital currency, bad. All digital money, bad. And they'll equate Bitcoin as the same kind of thing as a central bank digital currency. People that understand both know that they're nearly 180 degrees apart. About the only thing they have in common is they are digital forms of payment. And so one of the bills that we moved through that we thought would be unifying, because it's very unifying in the public, over 80% doesn't want a central bank digital currency, but in Congress it's very divided. Republicans want to ban central bank digital currency. We got a appropriations language that said none of these funds may be used to design, develop, or establish a central bank digital currency. Nevertheless, the Federal Reserve is actually writing code to develop a central bank digital currency. And I've said this is akin to allowing the Empire in Star Wars to build the Death Star as long as they promise not to turn it on, right? Because that's what they're saying. They're saying, well, we won't establish it. We need legislative authority. Like, I don't want you to build it. Like, don't even design it. And I think that's part of why they're trying to kill crypto, is because they view an alternative system. They're trying to get digital ID in place and everything else. And when I say they, this isn't all Democrats. This is the little cadre of really radicals that are aligned with Elizabeth Warren, and they're driving the agenda, and their accomplices like Sherrod Brown are bad on the issue. So I think looking at the politics going into this cycle, if we just make it clear this is an issue that is popular with the public, all age ranges, all political views, it would help solve a problem. But unfortunately in Congress, in the House and Senate, this is an issue that unites Republicans and divides Democrats, and we need to get those votes on the floor so that we can show the public.
Yeah, I mean, it's been kind of a torturous path to get any kind of crypto legislation through. And part of that is Congress kind of enabling the SEC to kind of take these actions because they don't step up to the plate.
Yeah, and where's the block coming from? It's Elizabeth Warren is working the block. Now, admittedly, look, Chairman Clayton wasn't the best on this issue either, and nor was Secretary Mnuchin. I mean, he was, I thought, a great Secretary of the Treasury, but he was not good on crypto. And in fact, what I call the Portman ambush. Senator Rob Portman developed the tax portion of the infrastructure bill, and Secretary Mnuchin worked with him, and that was where they put the kind of ambush on crypto in there, where it doesn't even work that way. You don't actually have a way to collect all of the information for everybody that moves money through a node. If you're hosting a node that runs proof of work, for example, or proof of stake, to know, well, who was the owner of this $25,000 chunk of cash, and they want you to collect that on something, like a 1050I form, and name, social security number, address, what was purpose, every kind of thing in the world. Like, it doesn't even work that way, and they want to tax those transactions. And the reality is, it shouldn't be taxed. There's no recognizable gain or loss on the transaction. It was just a movement of funds.
What about stable coins? There's been a little movement this week. The Gillibrand Lummis came up with a second bill. What's going on in the House? You've been very involved in trying to do a bill with the Democrats, right?
Yeah, we've tried very hard to find common ground, and because we need to. The Democrats control the Senate, they control the White House, so we need something that can get signed. And I've said there's two basic criterias that are missing from the base text. You have to protect commodity-backed stablecoins, and Jim Himes and I have worked close on that. He's a Democrat from Connecticut, and I think we've got common ground on the commodity-backed stablecoins, and that's important because there are commodity-backed stablecoins in the market today that are regulated by the state of New York. You wouldn't want to pass a bill that effectively nukes that capital stack and the value for all the current holders. And when the other thing is self-custody. So a lot of people in kind of the Elizabeth Warren orbit have said, well, if we can't really get rid of crypto, we can at least guarantee that it stays account-based. And if it stays account-based, it really isn't an incredible innovation in the market, right? Like everything, people are going to want most of their stuff account-based. You don't want to take the risk that I lost my seed phrase for some crypto, I lost my hardware wallet or something like that, in a way that you can't call corporate and get your password reset. Like, it's poof, it's gone. It's like cash in that sense. So people are going to want to hold a lot of their assets in crypto in an account. But if they can't hold any of it with self-custody, they can't safeguard themselves against bad actors like FTX, for example. The people that downloaded their crypto off of FTX's platform and had self-custody as they started seeing things were going crazy, well, their money was safe, but they're still in litigation trying to resolve problems with the rest of FTX. But the other part is, the disintermediation. You can't really have DeFi, decentralized finance, without the decentralized part. And the way that you really get rid of intermediaries is if peer-to-peer, you and I can move funds. And that is really the key distinction between Bitcoin, for example, and a central bank digital currency is permissionless, i.e. there's no third party that I have to get permission from to move money to you. It's like cash in the sense I can hand the cash to you, you can accept the cash, no one's in between us to be able to bridge it. And that creates a lot of insecurity for, people that essentially love the Patriot Act. We just want to see everything, and once we're sure it's okay, we'll let you move your money. Like, well, then is it really my money anymore? And I think that's one of the challenges here in the stablecoin market. So I had breakfast recently with Chairman Powell of the Federal Reserve, and part of the hangup is the Federal Reserve wants essentially super authority over stablecoins, and they want to treat them effectively as net asset value funds, money market funds, to say, well, if there's a sudden demand for liquidation on them, then the Fed might have to step in. So they want authority to basically say, we'll grant yours but not yours, but on what criteria? And Republicans are like, no, we want an objective criteria that's like, if you meet these criteria, then you shall issue. And they don't want that shall issue. They basically want it to stay a big club and you're not in it. And who's in it? The biggest banks. And that's really who's driving a lot of the lobbying here.
Do you think that these issues are surmountable? Chairman McHenry, he's retiring. He wants this bill. Do you think it's possible to get it done?
Well, part of the reason I shifted tactics, McHenry's been great on these issues. Emmer's been great on these issues. He's our whip. But Scalise has never really been engaged on these issues. But Speaker McCarthy was very engaged, very much understands these issues. And Mike Johnson is kind of an unknown on this. He's had his hands full with a lot of other things. We're trying to find a path to the floor. And that's part of where I started shifting my pitch with Leader Scalise is, I could try to explain it to you, but here's the part that matters for you between now and November. It unites Republicans and it divides Democrats. Put it on the floor.
But until anything happens, kind of the de facto policy, right, is Gary Gensler saying, come in and register.
Yeah, and that's the problem. I mean, thankfully, we have a little bit of certainty in the United States with New York Department of Financial Services. I've talked with Director Harris. She seems pretty solid. But when she moves up, if she moves up to the federal level for any position, she could just as easily be bad. I remember how much hope we had that Gary Gensler, having taught classes on this at MIT, would be somebody who was going to come in and be pretty good. And it didn't take long for that little bubble to burst. And so it's hard to say where we go. But like I say, this isn't accidental. There are people that are working to make sure that we don't get the certainty that is available in legislation. And as we continue to lag, a lot of market participants are saying, look, we just can't get the certainty in crypto, and they're just moving their investments into AI, which has a lot of promise and maybe a path to regulatory clarity. But when you start throwing other blocks back out here with regulations on that, they're just saying, all right, maybe the answer is, I'm just putting my capital outside of the United States because other places are getting the regulatory clarity, whether it's crypto or AI, and they're going to attract the capital. So this is a big failure for our capital markets. And again, I think part of the remedy is the SEC Stabilization Act, and we just got to find a way to sideline Elizabeth Warren's influence in the Senate.
Well, tying this back to the broker, predictive data analytics, and AI, somebody pointed this out to me, and I just want to ask you, do you find it ironic that the SEC is relying on, a 1946 Supreme Court case and a Depression-era law to say, oh, yeah, this is fine to regulate crypto, but when it comes to AI, we better get a huge set of new rules?
Yeah, you know how that goes. They say if it weren't for double standards, some people wouldn't have standards, right? and there are cases there where, you look at it and, I don't want to pretend that I don't have some glass houses, that I visit every now and then on some of those issues. But you look at it, they're basically the logic is what actually consolidates power for their slice of the market. And it might not be a fair accusation for most Democrats. There are look, Richie Torres, Wiley Nickel, Jake Auchincloss. I mean, there are some really good Democrats who understand this issue thoroughly. We might not agree on a ton of other policy, but we work together on a lot of financial services issues. We work together pretty well on a lot of privacy issues, civil liberties and things like that. And I think like there are a lot of bipartisan issues and a lot of common interests. And if you look, some of the poorest districts in the country are represented by members of the Congressional Black Caucus, Congressional Hispanic Caucus, Congressional Progressive Caucus on the one hand, and then on the other hand, the House Freedom Caucus, Republican Study Committee, the right flanks. And so there are issues there where you do find common ground, and the center might be working for a lot of people, the political class, the donor class, and a lot of folks like that, but it's not necessarily working well for the public. And that's where I say you go back and look at the approval rating for Congress. The public is saying, this is not working for us. And I think increasingly, it's not working for market participants. It's working real well for the big incumbents, and they keep using that lobbying power to build moats that protect their business. But when you got new entrants in the space and they can't get the clarity in America, a lot of them just take their talent and innovation and go somewhere else. And we really are missing some really important opportunities in crypto for sure. And I think if we don't get our act together, AI is going to follow a similar path if we just allow uncertainty to prevail or the certainty of something that's crippling. And, so hopefully we can forestall that. And I do think control of the Senate is an important thing because, again, Elizabeth Warren has got such a grip on this space for Democrats.
So outside of crypto, outside of technology, any other thoughts about what's going on at the SEC right now, Gary Gensler's agenda?
Well, we've spent a lot of energy on the climate change initiative, and apart from what is the nature of climate change, I think what is the authority of the SEC with respect to this? And it was, I think, an important Supreme Court case decided with EPA versus West Virginia, and the EPA said, we're going to regulate carbon, and they were going to direct all these coal plants, and it affected the state of West Virginia. They sued, and they said, look, I'm not saying whether you should or shouldn't regulate carbon, you just don't have a legislative mandate to do that. And I think that's a lot of things are covered by this for Gary Gensler. It's not whether you should or shouldn't have a rule that does this or that or the other thing. It's does he have statutory authority to even be working on this? And the answer is no. In the meanwhile, he's missing all kinds of enforcement opportunities. Didn't catch FTX, didn't catch Celsius, didn't catch all kinds of problems. Meanwhile, he does sue and settle things with like Kim Kardashian. So it is headline grabbing. It's all smoke and mirrors in a lot of ways. And it's designed, in my view, to prevent the certainty. It is sort of a chaos by design thing by Gensler. And I think one of the steady hands there at the SEC has been Hester Peirce. She's called out a lot of this for a long time. And, her own sort of financial services kind of tone, measured tones and, words and statements. But when you look through, she's been right about an incredible range of things. And when it comes to innovation, I think we'd be better to follow her. And look, I don't want to make that partisan. I want to make that the content of the ideas, not because of the party affiliation. And like I say, if you put Richie Torres in a similar role, I think he would be very effective as an example.
Are you disturbed by kind of all the lawsuits that are, almost every major rule is now getting a lawsuit. You mentioned climate, that got, 8 or 9.
Yeah, it is essentially Article 2 maximalism, which is, we can do whatever we want until you stop us. And I don't know how many times we have to stop the student debt forgiveness plan from Joe Biden. I think twice already in the Supreme Court, the eviction moratorium twice. They still keep trying to do it. So it's a complete disregard for our system of government, which to me is an impeachable offense. But aside from that, the election will happen, and we'll see how it turns out. But when you look at, you have to have some sort of respect for the separation of powers, and the legislative body is supposed to legislate. And again, I think that's why the SEC Stabilization Act is important, because it weakens the ability to act of your own accord. And if you look at that, not just over rulemaking authorities, it's over enforcement actions. So the SEC targeted Coinbase. They've supported the IPO for Coinbase. They've done really well. They disclosed their entire business model to be able to do it. And then years after the fact, Gary Gensler wants to come in and shut them down and say, oh, you're trading unregistered securities. Like, we told you all the stuff we were going to do when we did the IPO, and the SEC signed off on it. So they had 4 enforcement actions against them. The one they dropped was the Coinbase wallet. And you think, okay, this provides some certainty. The market reacts, Uniswap's out there. The very next day, Gensler drops a Wells notice on Uniswap. So it's very calculating, and it's designed to cripple our market in this space. I really think Gensler has to be recognized as a malicious actor. I wish we could remove him. Frankly, I wish we could get a freaking subpoena for him, but I don't have subpoena authority, and I'm the chairman of Housing and Insurance, so I don't really get a lot of swipes at Gary Gensler.
Well, and you mentioned there is an election, so things might change. I guess, would you recommend Hester as the next chairman?
Well, I think you'll look at a range of folks. There are a number of people who've served in the past. Hester would be a great chair, and I've met with a few others who would love to become the next chair. And, I trust that the next administration will make a good choice. I hope it's a strong Republican administration. Former President Trump will be our nominee. And I always assure people about Trump. When I was first elected in 2016, same election. And, not to make this as political, this is a story about voting. So I was talking to a young lady who was voting for the first time in 2016. And she said, how can you support Trump because this, that, and the other thing, and you're clearly different? And I said, well, look, I think it's a real clear choice. You're either going to have Trump or Hillary Clinton. Neither of them are perfect. But to me, it's not a hard choice between the two. And she said, I really pray a lot about it. And I said, well, I hope you make a decision, but I do hope you go vote. So I saw her later, and I said, what'd you decide to do? And I said, did you vote? And she goes, yeah, I prayed a lot about it. I got to the parking lot, I prayed a little more, and I went in, and I voted for Trump. And then I came out and asked for forgiveness. So I think if that's what it takes, I'll take it. Just vote for Trump.
I think we can leave it at that, but thanks for all your time, Congressman. It's been great to talk to you, and enjoy your thoughts.
Thank you.